Welcome back to the channel, Precious Millionaire Logistics. I'm sure it's been an eventful week for you guys, like last week. So at Millionaire Logistics here, we analyze the trade, the Euro odd, and we're able to secure our profits to 388 pips around that amount. So today right here, guys, without wasting much of your time, we'll be doing the Euro USD, guys. So what we have on our chart here is the Euro USD, the British euro against the United States dollars. So guys, before we look at what's happening on the chart here, guys, let's look at what has been happening. We have the Omicron variant here and there. That's the COVID-19 variant. So pretty much we should be expecting some kind of impact. It has already started in the world though, but somehow, somewhere around. But that doesn't mean foreign exchange business wouldn't really occur. So, the market will always move, right? Regardless. So guys, on the Euro USD, one of the things we have as reference for this is the NFP, right? You all know about the NFP. If you don't, please refer to our previous content. Maybe the previous analysis we did on the Euro USD would actually throw more insights on what we mean by the NFP, the non-farm payroll, right? So looking at the job numbers in the US, yes, the figures are really bad for the US, the United States dollars. The figures are really bad. And guess what? Our brothers on the other side of the line is paying badly for it. I mean, crypto traders. But that's not why we're here. So let's delve straight. So guys, looking at the chart here, let me take a few minutes, guys, to look at this. Please, this is not rocket science. We need to be very careful. Let me just take a few minutes to actually, go and see what the price has been doing. Okay, fine. From this point here, you can see that the price from here has been in an uptrend, right? Uptrend. We're on the weekly chart, remember, and the price has really maintained this uptrend from this level here, coming down here, testing this level, coming here, higher lows, right, higher highs, and the price actually came to this point on a higher low here, kind of broke through our moving average here, and somewhere around this line, it found its way upward. So pretty much from this level, it has really not made much trending moves. The price has just been ranging around this area, right? But in recent time, let's see what it has done. And fine, at this point here, we have a trend. Oh, at this point down here, we had a trend, right? The price broke pretty fine into the moving average, right? And then it has been a downtrend ever since. And guys, yes, we made huge profit from these moves. We made very huge profit. Swinging, of course, swinging up, down, swinging. So guys, this is where we have this price here. So normally, technically, I don't really need to place much emphasis on this chart. Like, if I were to be a lame trader, guys, I mean, after this impulsive move there has to be a corrective move. But from what we see here, we should be seeing maybe a slight reversal. So guys, let's delve straight to why we are here. Let's go main into my trick statistics. Okay, so I'll take this off. First of all, I want to establish my zones, like my areas, right? So where I want to establish the range here on the weekly chart before we delve. So I'll be using one of these tools. Guys, this is my second time I'm using TraderView. So if you see me perfect this, please, you need to give me a round of applause. Meanwhile, are you just checking out this content? Okay, you're new on the channel. Oh, you have to subscribe, man. There's a whole lot of value here for us. There's a whole lot of value. So guys, you subscribe to the channel and turn on the notification button so you don't miss any analysis we share. So you get notified at any point, right? Okay, then for our existing subscribers and our existing viewers, returning viewers per se, you guys know what we do here and you know how it is. So let's do it one more time, guys. Okay, fine. So I'll be using this tool. I think I've forgotten. There's a rectangular tool somewhere. So okay. So I'll be applying it. A rectangular tool. That's what I'm looking for. If I'm not getting it right, okay, fine. I need to, I've not actually looked at the chart in like a week now, like to analyze. So let me just get used to some things. Okay, fine. Well, it's the same thing. Okay, but I have an idea of what I'm looking for. It should be here. Fib retracement, gun spanner. Okay. Let's see. Okay, it's not here. All right. Let's see what we have here. Gresham candle, double top, trend arrow. No, there's something I'm looking for, guys. When I said, okay, this is what I'm looking for. The rectangle box. So we have from this level, this is the level I want to see, guys. This is the level I want to see around here. There's something I just put my eyes earlier on. So okay, let me draw it here. I'm still gonna adjust it. There is a demand zone here. There's a demand zone here. I saw it earlier while we're going back, but I'm gonna adjust it. Exactly. This is the area. So from this point here, this is where the price started that move. This is the level. This is the critical level here, right? So I'm going to change the colors. I'm going to make it green because we're doing demand now. So let's indicate that there's buyer pressure in this area, right? Okay, so there's a demand zone here, guys. There's a demand zone here. And like I said, I'm plotting the range right now, like the range where we're going to focus our trading on, right? The range. So what other thing can you spot on the chart? I've seen this with my eyes, but then I'll show you on that critical level. This one I'm going to use lines because it's a resistance level, right? It's a resistance level. Remember, guys, before we go forward, let me just give you a kind of brief approach on how I approach the chart. I'm a demand and supply trader. I also incorporate simple and basic things like support and resistance, guys. So support and resistance, demand and supply, critical turning area. And when I'm talking about demand and supply, guys, I'm going beyond OB levels, like your other blocks levels and all that, right? I'm talking about maybe a little bit of quantitative analysis and a little bit of, let me not say, but here and there, right? Okay, then. So I want to incorporate right now. The next thing, we have a base right here, and obviously there is a supply level here, but because that's not the reference, I'm not going to spot it here, right? Because we're not getting up to that level. That's not the reference for this analysis. So the closest point you can actually check this trade to, it's a resistance level. Remember, guys, by now you may have already known the buyers, but let's establish those bases because we may not be taking the trade immediately. Okay, so let's look at there's something I see here. I'm looking for a line. Okay, let me use this. Okay, let me use this line here. So I'll use this let me see, I'll use a line, a horizontal line. Yeah, okay. Okay, so this area, I'll use an area, right? I'll use an area. So an area will be fine. So let me clone it. No, there's something like cloning somewhere. Clone it. Yeah, let me clone it. So this the area, right here to around here. So guys, what have we done so far? Let's see, around here. So what have we done so far, guys? We've established two things, right? First, we've established our demand zone, right? Told that there's a demand zone, a critical level that I indicated on the chart here. So guys, what you can do now is you can also add these markups on your chart, right? After this analysis, when you view it, you can add these markups on your chart and actually monitor the market and take your trade accordingly, right? If that is nice, let's move forward. So right now I have the range. Right here I have what? The resistance level, right? We have our resistance level now, and we have our demand and supply. Now at this point, guys, we can then delve to the lower time frame, a daily time frame. Remember, we've been on the weekly chart, and from now we're looking at this, guys. I'm looking at this demand zone that has been spotted here. I'm actually expecting the price to bounce up, like to go upwards to this area. I'm actually expecting the price to actually move from this point that it is to this point. And guys, if we are to calculate here, I think from here to here holds about 290 pips or thereabout, between 250 to 290 pips around there, which is very okay, which is fine. So let's go to the daily time frame to see how, what will happen on the daily time frame, or let's spot it. Okay, fine. This is what we have on the daily time frame, guys. Right? You see the chart. On the daily time frame. Okay. We've already established our bias. Actually, we're looking at the market going upwards. So now on the daily time frame, there's something I do, and I always say how I actually approach the charts. First, I get my directional bias off the weekly chart, and then I go on to my daily time frame. On the daily time frame, I begin to look for price action patterns, right? You may have heard of, price action and a whole lot of price action traders. So I do my price action patterns on the daily time frame. So my price action pattern must always align with the directional bias I get from the weekly chart, right? And then on the 4-hour, like I always tell people, on the 4-hour chart, what I simply do is the same thing the market woman will do, the same thing the importer and exporter will do, right? It's the same thing. So now on the daily chart here, what do we see, guys? What do we see? Okay, we saw that this price actually, the market came down, right? I remember we taking a sell trade from this point. I think we took a sell trade here, we took a sell trade here in previous analysis, however. But you can see that the market actually came right into the zone, right? It was supposed to maybe react, it was slightly rejected here, and then it fell back into the zone. And inside here, what do we see? This is a price action pattern, guys. You tell me the name, you know it. If you tell me the name, you tell me. Really, I don't really know much about what they call candlestick patterns, but let me try. I want to believe that this right here is a morning star formation. I just want to believe. I may be wrong, but if you think I'm wrong, share, you can actually use the comment box, right? But I want to believe that this is a morning star candlestick formation, right? Followed by some indecision candles. I think this may be a spinning top. I don't really know. And I don't really care though. But let's delve down, guys. Okay, so this is where the market is at the moment. So I'm expecting maybe the price could actually the price may come down a little bit, may come down into the zone to actually fill some liquidity at this point before it heads upwards, or the price may eventually from this point really start heading upwards. But then we're getting close, guys. We're getting close. This is my bias. Let me just draw the arrow immediately. Okay. We have the arrow here. This is where we're expecting the market to go. This is where we're expecting the market to go. Right here. Right here. This is where we're expecting the market to go. Let me use a green one, right? Hope we're together. Okay. So this is where we're expecting the market to go. However, guys, remember, this may happen. The market, the price actually, let me not use the market, let it not sound too, the price may come a little bit downwards. Of course, but you know why. But it's not what we want to discuss on this content. Forgive me, guys, I'm goofing around, but this is just usually what I do. I like to feel relaxed when I'm analyzing the market. So and remember, guys, the same markups I have here is the exact markup I'm going to replicate, right? When I'm entering my trade, I'm just going to enter the trade on under sell. Remember, I'm using trader view, so my broker is actually not attached, connected to this market. So I'm just going to use the same markup here and actually enter my trades on my MT4 on a different account. That's my brokerage account, right? Okay, so the price may actually come down a bit, right? Maybe feel some liquidity level, maybe at this point, before it heads upwards, right, to this level. So we have our bias now. So guys, let me use the exact thing I learned from trader view. Guys, watch me. Hope I don't make a mistake. Watch me. Long position. Oh, fine. Good. So this is where I'll place it. I'll just place it where the market is right now, guys. Where the market is. Yeah, I got it. And then I'll take my take profit right here. And the stop loss under the structure, somewhere around here. Okay. Let's see if that is good. Oh, this is good. This is good enough. So this is what we have here, guys. Our risk to reward. You know what it is. So if this is our entry, right here should be where our stop loss will be, right? And our take profit up here, right? Should I adjust it a little? Or it's okay. It's okay where it is. So guys, we're looking at risking from where the market is right now. We're looking at risking about 300 and is that 301? 301, 171. How many pips is that? If it's too much, you have to adjust it. But I'll tell you one thing about stop losses very quickly. 301, right? 301. Let me see if I can do some mathematics. 301 minus 171. Okay. 171. So that leaves us with what? One is too much. 130 pips is too much, guys. It's too much to risk. Okay, so I'm adjusting it. Something like this would be nice, right? But then, guys, recall, this is not a signal. This is an analysis, right? So what we're going to do is this. Remember, After NFP, there's something I always do. There's something our traders always do. There's something we always do. We always assess the market. We don't just jump in because, Monday is a very new week. Aside that, a major news has just been announced. A major report from the United States and has just been announced, and very well, it's going to affect the US economy, which is very much reflected on the chart. It's going to change a whole lot of things. So guys, we'll assess the market first. Now, these are the things we may want to look at first. I'm going to drop a level again. If the market breaks above this level, right? If the market goes bullish immediately from here and breaks this level that is here, this level that is highlighted here, fine, we go long, right? If the market doesn't show any sign, if the market comes bearish, right? If the market comes bearish and maybe at this level, we begin to spot price action patterns on our lower time frame. That's the market come on a lower time frame. The market comes lower and begins to form price action patterns that indicates that the market, like the buyer pressure, there's buyer pressure in the market. We go long. That means we're entering long at an even better price. Let me repeat myself. If the market goes bullish immediately on Monday, right? That's Euro goes bullish immediately on Monday and breaks above this level. From here to here shouldn't be more than 60 pips, right? It shouldn't be more than 60 pips, so it's okay. And it breaks this level, right? Remember, this is a kind of minor resistance level. I call it minor resistance level, right? A minor resistance level. The market breaks here. Fine, we go bullish, right? However, if the market on Monday comes downwards a little bit, draws downwards a little bit, right? And as it draws downwards, maybe the whole of Monday, however, and then we find price action patterns on a lower time frame, like the 4-hour. I don't go lower than that. I'm sorry. I know I may be hurting some of your emotions, but I really don't care. But I don't go lower than the 4-hour. Now, if you see we start seeing some price action patterns indicating bullish pressure in the market, we can enter the buy trade and even have a tighter stop loss, right? Maybe our stop loss could be here, right? And then maybe we buy at this point. But then what that means is we're actually buying at an even better price, right? And then we still go bullish all the way. Remember, guys, price action pattern on the 4-hour time frame. If you don't understand what that is, very simple. Any indicator, whatever, that shows buyer interest in the market, that shows buyer pressure, we use that and we buy at an even better price, and we still go straight to our take profit, guys, right? So guys, in summary, sentimental bias for the Euro USD right now is bullish. But remember, guys, we still have to watch the market and observe the market. So if there's any changes whatsoever, or from the moment I spot the entry, if we have the time of not enter the trade immediately, we can actually do a review analysis. We've done that before. In our previous analysis, right, in our the previous Euro USD and our post NFP analysis we made, we watched the market. We used 1 week, one complete week, guys. For those of you who took the trade, you can attest to that. The first content there was Market Watch, where we were watching 4 pairs: the Euro USD, the AUD USD, the Pound USD, and the USD card, right? And the second content we shared was when we were taking the trade, right? Where I gave the analysis for the Euro USD, the AUD USD, and the USD card, 3 out of 4. We didn't take the Pound USD anymore. And what happened was, even after that, because there are some kind of changes, and I noticed it, right? I noticed the analysis I gave. I mentioned it, but I felt maybe some people may have been on the ignorant side, and I did another analysis again. So I was already on the Euro USD, but I wasn't on the AUD USD and the USD card, right? I entered AUD USD card a day after I entered the Euro USD. So I made another analysis again on the exact price, how we're going to enter the AUD USD and the USD card. And guys, many of you are testimony to the outcome of that trade. So we're going to apply same principles and common sense in the Euro USD. We're not just going to jump into the market, right? We're going to observe the market. But for now, our sentiment from the Millionaire Logistics end is bullish on the Euro USD.